Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital Live Trading Floor. First and foremost, all glory to the Most High God, our Heavenly Father. We thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. 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 Can you hear me? Hold on. Let me do a check. Okay. I can be heard. All good. All right. Another week. We back at it. We back at it. All right. Before we jump into the charts, I just want to say there was a time I used to sit down in front of the charts with no real plan, jumping between strategies, second guessing every entry, and honestly just hoping the trade would work. And that's where most traders are today. Not because they're not capable, but because they don't have a structured process that they're following on a consistent basis. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, or 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the three pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% Club. Let's go. But before we dive deep into the three core pillars, when you step into this arena on this battlefield, you must first have two crucial realization. Realization number one: trading is war. This is not a get rich quick scheme. This is the hardest thing that you will ever do in your life. Realization number two: all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think success in the markets come from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on three core pillars. First is money and mindset. This is the foundation of success. Then we have risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. Then lastly, we have trading edge. This is where all traders start. I know this because this is where I started. All right, and that's why in today's session, we're going to hone in on our trading edge. Now, everything we do here is built around one thing, and that is confidence in your trading edge. And that confidence comes from three things. One is understanding how the market actually operates. Not what social media says, but how money truly moves. Two is having one trading model. One model with IPTA signatures that you trust and execute consistently. Third and finally is having a plan and a process. Because without a plan and a process, you're just reacting to the market and you're just winging it. And this right here, this session, this is where we focus on the third piece, the process part. I'm not here to force trades. I'm here to execute my plan step by step in real time. Let's get to the live trading floor. I'm excited to get into the market today. It's been a long weekend. All right, we took yesterday off. Obviously, I'll explain in a second because we had no news. All right, and I just needed the additional rest, so I took it. It is what it is. As you're watching, don't just look for entries, but pay attention to the process behind the entries because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, that's where we break down all three pillars inside of the program. I used to think winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, why you're doing it, before, during, and after each and every trade. And that's what we're building here today. All right, let's get into our daily process. All right, our weekly target going to this week is 3%. Mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today. I think we're about to hit all-time highs. Excited to continue to grow. All right, and get 1% better in these markets, in these charts. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Tuesday, April 21st. All right, we have high impact news came out at 8:30. All right, we have medium impact news coming out at 10. We have news today. All right, making an optimal day to take a trade. As you can see on Monday, April 20th, we didn't have any news, so it wasn't really an optimal day for me to take a trade, even though obviously we can have a separate account for that, but it wasn't really an optimal day for me, which hence why I decided to just take it off and just enjoy my money making Monday away from the charts. It's okay to take a break from the markets, all right? You don't always need to be in the markets. Just because the markets are open doesn't mean you always have to be in there, okay? Anyway, let's digress and progress. Yeah, we have news today, making an optimal day to take a trade. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 on a day, which gives us 3 bullets going into our session today. All right, well, into the whole day, really. Weekly program hasn't been established yet. Oh, I'm not sure. I haven't looked at the markets, but obviously we have Monday's range already completed. So we'll go ahead and see what our weekly program is saying, and we'll get on to our previous day's review, and we'll get into our daily 3-step process that we've been doing consistently. All right. Okay, so weekly program has been established, all right, from 12 a.m. to 12 a.m. for Monday, right here. We took the buy side, so weekly program going to this week is a buy program. Oh, we did take all-time highs. 7:30. Draw liquidity on a high time frame has been hit, and now we are very much neutral in the market. Let's clone this. I'm just gonna wait and see because all my draws have been hit pretty much, and yeah, all-time highs, baby. Trading at all-time highs. Anyway, weekly program has been established as a buy program. Okay, until we come down and take Monday's low. All right, we're in a buy program. Let's go ahead and review Monday. Let's review Monday quickly. Noticing some sexy stuff in the market. Ooh. Oh, let me undo that. We took dealing range buy side. All right, had a retracement set up that turned reversal. All right, retraced to reverse. It can either, once one side of the dealing range is taken, price can either retrace to continue or retrace to reverse. We had a retracement to reversal, which flipped our bias on the day from buys to sells down here. Okay, there was a trade in here for me. There was also a trade in here for me on that 10:30. Noticing some beautiful stuff. Then we caught. I deleted the dealing range, didn't I? Anyway, we caught this retracement set up, which also turned reversal, seek and destroy type of thing. But this would have been our trade for the morning. I'm not sure if I would have took anything in here, but I did notice something in here. Looking back at it, I wasn't sure if I would have took it, but definitely knowing what I know now, I would have took this trade in here to come down in here. But yeah, beautiful setup. PM session, so continuation. All right, what wasn't a continuation? It was a continuation of the retracement setup to then cause the reversal. But yeah, something I'm watching in here using opening range. Using opening ranges, dealing range. Oh, powerful stuff. Can't wait to walk it forward. But anyway, that was yesterday. We had three solid setups in the day that I saw that I probably would have engaged in going into Monday. But let's get into today. Let me adjust my 20-day because it's now same range as a 60-day. It's a madness. It's a big ass range. I'm gonna move this up here, all right, but I have no draw. Let me turn it to the side. Yeah, I have no draw on liquidity right now because all my draws on liquidity has been hit. I'm just gonna let the market do its thing and signal to me what it wants to do in the upcoming days, upcoming weeks. But for now, we're neutral on the higher time frame. Let's get into today. Step one is condition. Same thing, just a different day, baby. Just a different day. In order to identify our condition, all right, we must first identify our dealing range. We go from 12 a.m. to current price action. We note the lowest low to highest high. Just like that, we go our dealing range. We know liquidity above and below, which we don't have anything above because we're trading at all-time highs, baby. We're trading at all-time highs. So no liquidity above dealing range. Dealing range is all-time highs right now. Below, we go Asia, sell side. Below that, we go PM session, sell side from yesterday, from Monday. And that will be all. If we need to go down and let's just do lunch since it's right here, and then that will be the last one. Should price go any lower, we'll just go ahead and identify them as we need it. But for now, we've got what we need on the chart. Do I still need to drag this high over here? Oh, I did play a crucial role yesterday. I'll just end it right there. Previous day's high. We're close to dealing range, sell side. And now we wait for one side of the dealing range to get taken to give us our condition going into our session. Good morrow, good morrow. Let me pull up this thing here because why do I always have to do it? Oh, it's already let me. Oh, we're kicking off. Dealing range sell side got rated. All right, we're in a sell program for the session, which is against our weekly program. Opening range gap is below price. Okay, so we gapped up. So we have a premium gap up. We do have previous day as a point of interest. Okay, but this opening, I'm just gonna let it do its thing. Seems to be a wild opening. Seeing how price gravitate towards, all right, we've hit constant encroachment. I was gonna do something here, but I forgot. Oh, I was gonna make sure I'm logged into where I need to be logged in at. Q. Taken Asia session sell side. All right, below price we have PM session and we have a lunch session from yesterday, and there's a current draw on. You know what? Why have I not? That's because I probably can't even add it to favorite. That's why. Next draw on liquidity is PM session buy side, sell side. All right. Then below that we got lunch. Then AM session and then previous daily low. Back inside this week's open range, new week opening gap. Clean up here, boy. 15-minute. Waiting for a retracement for then to anticipate the continuation to continue to the downside. price is currently respecting first presented fair value gap. Uncharted territory right here in these markets. Gotta be extra patient. Gotta require more from the market. Don't be eager to jump into anything. We've established our condition, but we're patiently waiting. Step 1's been checked off. Step 2, types of trades. We have 2 types of trades: retracement and we have continuation. Retracement can turn reversal, all right, but first thing, once one side of the dealing range gets taken, is always going to be a retracement setup. We wait for the retracement. We always anticipate a continuation, but we understand it can retrace to then reverse, all right, take the other side and flip our bias. Wicks do the damages, bodies tell the story. The bodies are closing well below first percent fair value gap, all right. Price is showing me signs, right, that it wants to gravitate towards PM session sell side. Nothing for me to partake in yet. Clocked something with open range, dealing range that I'm excited to walk forward. It gives me a better perspective in terms of where price could be heading to based on my overall dealing range. So I really like that relationship I was noticing in price. So excited to see, excited to walk it forward, excited to collect more data. All right, get that 1% better at reading these candlesticks. 1% better as an analyst, as a trader, or that fund manager. Let's see how the magic magnet performs this week. Let's see. PM session, sell side is my draw until dealing range high gets taken. All right, that's what would change or flip my bias on the day. Well, on the session, really and truly. It's chilly up in it. Nothing for me to do here yet. Nothing at all. Patiently waiting for my setup, for my model, for my entry. I'm not seeing it. I'm not forcing nothing. I do have Asia low and previous day's high as levels of interest for the continuation to the sell side. So we'll be paying attention to those levels. But so far, nothing here for me. Price seems to be respecting open range gap here. Now we've got a closure above first presented fair value gap. Currently for retracement setup, this is the high that needs to go for me. But at that point, would I even be interested in a retracement setup? Yeah, no. We're at Asia low. Haven't quite seen a retracement setup. So this should be interesting. Data collected for trading in the range or buying in premium and selling in discount. All right, so this week I'm moving forward, we're able to enter those trades. All right, watch us not get any though. That's usually how it works. I'll be watching this market structure shift. Nothing that I would feel confident engaging in, okay, just because I haven't seen a retracement setup yet. All right, so $9.50 macro. Popping off. Show me the market structure shift again. What market structure shift? Oh, right here for the continuation sell. This one, the 945 swing low. Anytime, anytime, anytime. Respecting first presented fair value gap as an inversion, all right, to go higher. This setup in itself is something I've been collecting data on, so paying attention to it. Another one confirmed here. Watching how price behaves at this high. Watching how price behaves here to draw higher. That would have been a potential entry. So we're watching it. Watching that inefficiency there. Like that. It is working in the upper quadrant of that inefficiency. Yeah, yeah. All signatures I want to see if I was in this retracement setup here. Not one that I'll currently take, all right? One that we're collecting data on. All right. Watching this as a retracement setup here. Market structure shift back above. Now that we've seen the retracement, okay, we can comfortably be able to get into a continuation should price present that to us. Oi. This is now the low that we need to, no, not that, actually, this is the low that needs to go. for me to be interested in a continuation sell. Solid one here, this one, isn't it? Would be giving you -1 already. Bread and butter setup. Excuse me. Expecting this inefficiency in here, there. All right, this is now the low I'd be interested in. Back at previous day's high. This is now the low I would be interested in. Should it give it to me? But it looks like we're heading for dealing range buy side. And this up here, doing its thing, the buy. I do believe I've collected enough data to engage in these, but we'll give it this week. We'll give those this week. We'll give those this week. -2, -1.5, -2 on the way. I'll give it one more week. No qualms with that. Could have used this as a retracement, right? 10 o'clock. Open range is complete. got a lot of lines on here, don't I? It's always the problem. It's always my issue. Try to get clean charts and it just ends up being more messy. I'll get there though one day. I'll get there. I'll get there. This is the market structure shift I'll be interested in. So waiting to see if it gives it to me. I'll be in there. Ready to engage, ready to fire, ready to pull the trigger. Oh, we have come into dealing range equilibrium. Nothing for me to do yet until we get this market structure shift down here. No setup confirmed yet. Watching how price behaves in this inefficiency here. About to take open range buy side. Excited to see how this plays out here. Excited to collect more data on what I'm noticing in price action. So let's see how it goes. Let's see how it goes. All right, taking open range buy side. That means potentially could want to go higher for dealing range buy side, but I'm paying attention. Something I've noticed. This is now the low that needs to go, all right, for me to be interested in a retracement. I mean, continuation, sorry. So confusing. I'd be confusing myself. Since we took the open range buy side, all right, I'm watching how price, if and how price gravitates towards dealing range high right now. Just something I noticed that I'm collecting data on because I like what I see. Gives me a cleaner picture in terms of the direction draw. This was it right here. This was it right here. Solid setup there. Cool, cool, cool. It's also potentially a retracement. I'm watching this market structure shift here. Should it happen? Watching it. Yep, it happened. Watching it here, an entry here to dealing range buy side. Would have been tagged in there already. Yeah, yeah, yeah. I will watch this market structure shift, but I really want this one. So we're gonna watch this one. I want to see a body closure below this inefficiency. Oh, I was tripping. It's down here. We're watching it. We're watching it. Watching it together. All right. I'm watching this also as well. Take price higher to dealing range buy side. You see what I mean about that opening range? Gives you a clear depiction on potentially, right, where price is going in terms of my dealing range high and low and draws on liquidity. Ooh-wee. This next level here that we're hitting, insane. Insane. Like I said, I want to see a closure below this inefficiency. I'm watching this, all right? I'm watching it. Obviously, time is not on our side, but technically, this swing low inside of the macro just completes outside, right? Either way, we're watching. Would have been tagged in there already. My interest is down here. But this also wouldn't have been an issue. If it gives it to me, I'll be interested. Obviously, up here would have been a smaller risk, right? But I don't mind. I don't mind down here. I don't mind waiting to see more. Wanted to see a closure below this inefficiency. Okay, we've seen that. If it comes back inside of it, I want to see price remain in the lower portion of this inefficiency. All right, and then give me that market structure shift. But nothing wrong with an entry here if you wanted to take an entry here, okay? Nothing wrong with it. Just because I wasn't feeling it doesn't mean it wasn't your setup. said, want to see price stay in the lower portion. If you go an entry here, all right, last line in the sand. Should we use all the whole thing here? Can't really. Yeah, it will be the whole thing there. But this is the characteristic I want to see. Gives me more confidence to enter in the next market structure shift here. All right, we'll take that in there. Let's get our targets. Big range, obviously, but that's fine. I can close this. Oh, change this here. No. So a buy limit. Take it to 57850. While we have that, let's watch this as well and see if they're giving us anything yet. Nope, nothing yet. -1 hasn't been hit on that, so still would be in there waiting for -1. Anywho, watching how price behaves in this inefficiency here. Last line in the sand for me here would be a closure, all right, back above this inefficiency. Will be a warning sign. For me, I'll also be watching these 4 consecutive up close candles. We can go ahead and delete this. Actually, hold on, let me see something real quick. Sure. Yeah, still would have been about round 2. Rounded up. Rounded up. And don't have time, just price. Yes. I'm basing it off this swing low that started inside of the macro, alright, completes outside of the macro. You're right, but I've been collecting data on these setups and I'm fine with the outcome of these setups because I've collected enough data to be okay with it. I've seen it 60-40, 60% pans out, 40% it doesn't. Alright, so that's good numbers for me anyway. But yes, you're right, we don't have time. 100%. I accept the risk. Alright, we got a closure above this inefficiency. Alright. Getting subtle signals. Alright. Watching how we behave in the main threshold of this OP here. But like I said, closure above this inefficiency, I will reduce risk. Be more tighter because obviously, once again, we don't have time, just price, right? like how we're respecting the lower portion of this inefficiency here. Like I said, the closure above that, that will be my warning bells. I got a lot of lines on this chart. Don't know how to do without the lines. Well, I have to figure it out. Some of the lines are unnecessary, maybe. $10:30 in less than a minute. All right, first hour of trading is about to be behind us. Now that we've got closure below it, paying attention to how we behave in it. We don't have time. We don't have time. She's right. She's not wrong. She's right. Bodies tell the story. Wicks do the damages. So far, so good on the bodies here. 10:30, first hour of trading. It's behind us. It's already identified on that. Don't you draw them out? I don't see price take this low, alright, because it will be a re-entry on the continuation to the sell side. So watching this market structure shift here, and also this market structure shift here, should price give it to us. This would be a trade with time, okay? This would be a trade with time. Oh, okay, alright. I didn't know you could hear, I thought you had this muted. You listening? This swing low here, alright, takes a swing high for the time. Is a valid swing low, valid continuation setup. Should price trade to and through it. Oh, yep, there you go. There goes the time and price for you. If you're interested. Well, today you're listening, yeah? Today you hear my annoying voice, yeah? Mm-mm. Let me see how it looks on here. It doesn't look too bad. The lines don't look too bad. Don't look too bad. Yeah, it's not bad. For now we'll keep it as it is. Alright. We're getting a body closure in the lower portion. Paying attention. In this market environment, sales is risky business. Still would be in this continuation sell, all right, until this high goes. Still would be in this one here. Trading at all-time highs. It still would be in here. All right, this would have been the ideal, obviously, ideal entry. Smaller range gets you to your target quicker, I guess, right? Let's see. You still within a dealing range. Sell side is where -1 is at on that trade. So we'll follow it regardless. See how it plays out. I'm not appreciating the wicking into down here though. I'm not appreciating that. I want to see a body closure. I want to see a body closure. Let me see that body closure. Because that body tells me the story. All right, I want to see a body closure. Right, definitely would have been taking out this one here. Said what? You did what? Where? What? When? How? Who? For me, I'm still okay, right? I said body closure. I'm not seeing that. I'm not seeing that. Potentially a stop hunt here. Maybe, but like I said, I don't like the wicking at the market structure shift here. All right, I'm going to see a candle laid below that. For now, ears are still propped up. I'm still alert in this trade. No warning bells, no alarm bells yet. Wicks do the damages, the bodies tell the story. It wicked all the way up through this inefficiency, came into this one, but look where the body's closed. Maybe I can thicken them up a little bit. Yeah, but then I don't want it to be too dominant, you know. Oh, my biggest issues is the things on my chart. saying text messages on my watch, but that don't appear on my phone. How does that work? Yeah, strange. Strange, strange, strange. Or does it go to a different, like, spam over here or something? Yeah, I don't see it. Whatever. Strange, strange, strange stuff. Waiting to see that body closure. Lay that body on top of it. It will make me feel better about this trade. Wicks do the damages, okay? Bodies tell the story. Like I said, I wanted to see the body stay in the lower portion. That's exactly what we're seeing here. Let's get a body closure below this market structure shift, because all that wicking it, it doesn't work for me. Okay, IPTA, it doesn't work for me. Second partial, our terminus on the trade is in line with opening range sell side. This trade here, -1, is at, I believe it was at, let's just use what we have on the chart so we don't have too much going on here. It's still the same high. Yep, -1 on this entry, all right, would have been hit already. This is a valid entry, all right. We have the swing low inside of the macro, all right, completes outside of the macro. Get the market structure shift outside of the macro. We've collected data on it, all right, and we agreed that yes, even though some of them were losses, some of them were winners, we're okay accepting those risks. So -1 on this entry, should you have taken that entry? I wanted to see a bit more, all right, potentially when this candle closed below it, when it came back in there, would have gave me more confidence to get into it. -1 smashed, -1.5 smashed on this entry, but that's not the entry we're on. We're on this one. Bigger range, all right. Bigger range, but it's a continuation setup, so I'm fine with that. And we're seeing the characteristics that we want to see in price so far. Bread and butter entry here, getting out here 0.5, bread and butter setup right there. That bread and butter is gonna feed you. It's gonna feed you. I can't wait to have an account that just does that. I cannot wait. I think that account will outperform all the other accounts, even though risk to reward wise is gonna be skewed, but the probabilities of being on the winning side is so much that it will just outweigh the risk. So I can't wait to test that out. Anyway, watching this here, I want to see price stay below that inefficiency. We're in this inefficiency here, so I want to see price disrespect it. I don't want to see no respect of it, none whatsoever. taking that low. That we at 10:50, my watch went off, so that means 10:50 macro is upon us. It's either gonna be on our side or it ain't. Either way, it is what it is. I've done my job here today. Outcome is out of my hands. I want to see a body closure, mean threshold, and then potentially a body closure in the lower portion of it to our first target. But this is what is standing in our way right now. Okay, we're paying attention. This is what's standing in our way. Let's see what 1050 macro brings. Oh, this and first presented fair value gap. We got a lot of roadblocks right now in front of us. We didn't take dealing range high yet. Okay, so drawn liquidity is still to the sell side. Alright, still PM session sell side from yesterday. Already took our first drawn liquidity, which was Asia session sell side. Alright, 9:30 took that immediately, along with dealing range sell side. Let's get that body closure. I'm looking for body closures in the lower portion. I don't like this. I don't like that. Don't like that. Respect there. I don't like that. You have two roadblocks right now to our first target, and it's this inefficiency and first presented fair value gap. Oof, a market structure shift here would be problematic. With the bodies doing this, very much so problematic for me, but I'm watching how price gets in here and how it gets in here, how it behaves. It's right at same high, 805.50, 805.50. Yeah, we definitely grabbed that there. So my ears are back propped up, all right, in this trade. Back propped up. Paying attention here. Wouldn't have hit -2 on the initial if you took the higher market structure shift here. All right, would have just given you -1.5. not -2 yet. Okay, but we in this one, so that's the one we watching. Watching price in this small inefficiency here. All right, with the volume imbalance here. Let's get that body closure. -2 getting smashed on that the earlier entry, the earlier market structure shift that I was paying attention to, but wasn't quite confident in it. Right, I was confident in this one after I saw that we had a body closure below this inefficiency. Hey, there go that body closure. That's what I want to see. -2 getting smashed. -2.5 will give us our -1 on our current setup. There we go. Thank you very much. -1. We appreciate you. Stop being reduced. I'm gonna go to. Let me stick to, because I was already at the bodies, right? I'm gonna go to 50. This is unprecedented for me. Anyway, let me go to where it's supposed to go to. 69, 869, 869. Because I was already here at the bodies. Oh, I need to reduce the one. Let's set one stop limit by stop. Let's take it to 50. We won't do that again. This is a one-time thing. It's a one-time thing. But typically my stop would be at the swing high, but this range was just huge. Plus I I knew where my terminus was. If the trade, a body closure here, I was definitely offside. So I'm fine with that. Terminus also the opening range sell side about to get liquidated here. Not yet though. Let me not speak too soon because it can always turn around here. It can always turn around. Thank you very much. We appreciate you. We appreciate you. Setup, model, trade management, doing its thing. Let's see what else this trade offers us. This one here. Let's see how many contracts it would have offered us if we got in there. Short position tool would have given us 3 contracts. Okay, so we would have been out at 1, 2, 3. At -2 would have been out. But this trade has gone to -3.5. Let's get back to the one we were watching though, the one we were actually involved in. Let's see if -2 is on the cards here. So this would have failed when we came back up in here and drop here. Dang, but I don't know if it would have given over entry unless this, when we took this market structure shift, the same candle came back up in here. Not sure we would have got an entry there. Definitely not there. Unless this candle once again, once it took this low, came back inside. The whole team winning. I'm trying to stay. Guys, good luck, good trading. What? You're leaving already? Did you leave? Where are you going? Bye, teacher. See ya. Good luck. Good trading. Happy hunting. Happy hunting. Thank you for tuning in. Appreciate you. See you tomorrow, same time, 9:15. Don't be late. Can't believe you're leaving already, though. This is about the time you leave anyway. Hold on. -2. -2 getting smashed here. Alright. Our drawn liquidity. Magic magnet doing its thing. Yes, sir. Drawn liquidity getting smashed. Yeah, buddy. Soon enough, alright. The goal is to have 1 remaining, alright, to actually hit my draws on liquidity. I think I could do the same thing I do here for this. Let's copy it. Just so I can know where my draws, paste it. Where did it paste to though? You know what? Delete it. I'll just put its own thing here because I don't know where it pasted it to. Initial draw. Oh, you're a bit tad too big for my liking. Can change the color. Can't see the deep green. That's the green. Okay, now we can clone this big bad boy. Second draw on liquidity, getting smashed. Our next draw on liquidity is lunch session sell side, below price, okay? But our second draw on liquidity there, getting smashed. -2, getting smashed. -4.5, getting smashed on that initial entry here. That first swing low in the macro. Everything just getting smashed, smashed, smashed. We're just smashing today. Solid setup, solid setup. This inefficiency played a big role, all right, in supporting me in this trade, all right, me being comfortable with being in this trade, right. I wanted to see price stay in the lower portion of it, all right, in terms of the body, right. I want to see price stay in the lower portions of it, which it did, right, which gave me more confidence, all right, and more comfortability to sit in the trade while it was doing this consolidation in here, all right. As long as we wasn't getting the body closure above this inefficiency, like I stated, I was fine in my trade and there was no alarm bells. Let's see what else this trade will offer us. All-time high trading. Probably it's gonna tank. It's gonna tank, boy. It's gonna tank, because that bitch been going up. I'm sorry, excuse my French. Excuse my French. I'm not supposed to be cussing in this one. Just showing up, following my procedures and protocols and my processes. That's it and that's all. Oh, it's a just dealer range. I'm gonna do a trade performance review in a bit here because I'm distracted. I'm sorry, DJ. Not DJ. This ain't DJ. Wrong platform, my guy. All right, all right, all right. I think that's enough for us for today. That's enough for us today. Let's take a look at our trade on the day and get out of here. Right. Arrived at our desk. All right. We identified our dealing range. All right. Step one, condition. All right. In order to determine our bias in the session, we have to identify a dealing range and wait for one side of the dealing range to get taken. All right. We had sell side taken, confirming our condition as sell program for the session, going against our weekly program. Okay. Our weekly program has been identified as a buy program. Okay. Until we take Monday's low. Right? Dealing weekly program is buy program. So our session program today was against our weekly program. It's just nice to be aware of, where you are in the week and where you are in the session. I like to know. It's not necessary for the trading here because we're intraday, short-term trading, day trading. So it's not really necessary to have the weekly program, but I just like to know it regardless. Anyway, we had our condition established as a sell program. We saw retracement set up. We saw a few here that we're collecting data on, but definitely one here that confirmed the retracement for us. All right, which then gave us the green light go ahead to anticipate the continuation. All right, we came into 20-day high, which is also I'll say Friday's high, which is also not all-time highs actually. Was it? No, couldn't have been. Yep. Actually, came into our previous all-time highs. All right, created. Yeah, just a lot of highs. Came into internal liquidity here. We had a swing with a displacement market structure shift back below that internal liquidity. All right, one thing here to mention of note, which one of my students brought up. She said we don't have time, just price. All right, but as you know, we've been collecting data on setups that start inside of the macro and finish outside of the macro. All right, and we agreed that we've seen enough to accept the risk that comes with taking those set up. All right, and just understanding that hey, there's a potential high probability that it's going to be less probable than actually it forming and completed inside of the macro. But we've seen enough data to have confidence enough to still engage in this setup. This initial market structure shift was valid, but for me, all right, I wanted to see more. Like I wanted to see price close below this inefficiency and potentially take this sell side. This market structure shift was where I felt comfortable and confident, right? Because it's all about confidence. If you don't have the confidence, then you're uncertain, right? Certainty equals confidence, and I want to be confident. I want to be certain, even if I got in here and I took a loss, I still would have been okay with it because this is where I felt confident and certain in getting an entry in. And like I said, as long as we stayed in the lower portion of this inefficiency here, all right, I was fine in the trade, right? This was going to be my alarm bells to be like, hey, okay, pay attention, something you could potentially be offside here, right? We didn't get that, all right? We just followed it, let it do its thing. Once we entered the market, the trade was in the market, the model and the trade management's hand, and the outcome was out of our hands, right? We showed up and we did our job. Our job here is to identify the setup, execute on it, and the rest is out of our hands. Solid setup, trade performance review. What I did well today is that I showed up, all right, got 1% better. It's all about showing up. If you're not showing up and sitting in front of this market, watching these candlesticks print, then you're missing the first step to growth and to develop as a trader, as an analyst, all right? So showed up, got 1% better, gained experience for sure, learned lessons that I'll take into my next trading day, next trading session, gained more confidence in my model, in what I'm looking for in terms of price, in my read on the price action, in terms of when I enter a trade, what I want to see, all right, the characteristics that I want to see that I'm on side, all right? That's pretty much what I've been paying attention to once I'm in a trade, all right? That's pretty much all I can do, really. Pay attention to the candlesticks because the rest is, as always, out of my hands. Why for short today? Woke up at a decent hour, got my morning routine in. Chart wise, I showed up, followed my processes, didn't deviate from my procedures and protocols. So I don't think I fell short, really and truly. I'm really proud of myself. I'm not gonna lie. I haven't really been falling short chart wise. Also, like I've been waking up at a decent time and getting my morning routine in. So yeah, since last week, like it's been, because that's always been something that I fell short on, which was wake up time and morning routine. But recently, I've been really getting it together on that. So I'm very happy and pleased with myself about that. I'm pleased. Chart wise, I I have a process that I'm following. I have procedures and protocols. Sometimes the only thing I'll fall short is me not remembering my procedures and protocols. Okay, which is why it's important to be constantly going over your procedures and protocols and your processes. All right, so you're not forgetting. All right, because it's easy to forget once you're in front of the chart. You know exactly what your procedures and protocols are, right? Because I have a few. All right, but yeah, been keeping up to date with that. So yeah, all in that to say, nowhere I think I fell short today. How I can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me for what I got going on. And yeah, just keep showing up, taking small steps in the right direction. Eventually, we'll get to our destination. Keep analyzing the data. Go back today, all right? Analyze this morning, see how, right? We could have, if there was something we could have done differently that could have been better. Pay attention to the candlesticks more, all right? But I guess one thing that I am noticing now is that since this market structure shift and hadn't seen the closure below, right? When we saw the closure below and price return into this market structure shift here, that could have potentially also been an entry for me, all right? Because I did want to see a closure below this inefficiency. Once we saw that, all right, potentially this could have been a valid entry as well for me, okay? But for now, that's data banked in my head for next time, all right? When I see this characteristics, all right, I will be fine entering in this trade and the stop up here because we did have that market structure market structure, the swing inside of the macro, okay? All right, so and this one formed inside of the macro, just completes outside of the macro. But all in all, solid morning. Let's see what the outcome is, which is not something to really pay attention to, but let's just see what it was. 312. Cool. Solid stuff. All right, let's get to wrapping up here. Let's wrap up our morning session. Got our first presented fair value gap on a 15-minute time frame. Want to see how it keeps price lower. All right, before we wrap up though, I want to leave you guys with this. All right, there was a time I would finish a trading session and still feel lost. All right, even on days I made money, I didn't really know why it worked, and on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. As you can see, winning or losing, I have a system that I can fall back on, and I'm not really pressed. As long as I'm showing up and following my processes, that's pretty much my edge in the market, right? Me and my processes, that's my edge. And here's the truth: most traders only focus on entries, but consistency comes from the system behind the entry. All right, you need a solid foundation before you can enter the market, right? So if you've been watching and thinking this makes sense, but I don't really have the full system yet, that's exactly why I created the 10% to 1% club. And that's where we go deeper into all three pillars: the full model, the risk management system, the mindset and money principles needed to join the 1% club, and the exact process to follow daily. All right, the process that we've been consistently following on a daily basis right here in front of you. We're just walking you through everything that we teach our analysts, all right, step by step and live market. I don't like that. This is real messy. I knew there was something there that I didn't like. I could see it in the camera that I didn't like it. But anyway, so if you're serious, I'm so sorry about that distraction. If you're serious, squirrel. If you're serious about becoming consistent, okay, that will be your next step to join the 10% to 1% club. All right, it's a community of traders and analysts that are looking to do things the right way, follow processes, be more process oriented and outcome focused, okay, and headstrong in terms of heading to the 1% club. All right, it's okay to join the 10%, all right, but in order to upgrade to the 1%, you have to know what the 1% think and how they move and what they do with their money, okay? And I'm not there yet. I'm still on my journey to the 10% club, okay? But I'm studying and focusing on what the wealthy are doing that I can do, right? Once I get to the 10%, how I can fast track to that 1%, okay? So don't think that I'm there already. I'm not there, right? I'm still on this journey to the 10%. I just know what I need to do to get to the next level, right? So that's pretty much the knowledge that I want to share, right? Success leaves clues, all right? We have well 1% people in this club, and there's clue they did something right to get them there, and they love to share those things that they did. So I'm just studying them and taking in what they did so I can use that to get to that level as well. Anyway, I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow, all right? Which is something I'm trying to walk forward, all right? And showing you that once you have that, the results will follow, okay? It doesn't matter about the losses, it doesn't matter about the winners, okay? Just follow a process, follow procedures and protocols, all right? As long as you've tested your model enough and seen it pan out in that more times than not through back testing data, walking it forward, all right? The probabilities are always going to be in your favor. That's all for today, folks. I'll see you guys in the next AM session, 9:15 kickoff tomorrow. Tomorrow's Wednesday? Yeah, Wednesday, April 22nd. Be there, 9:15 on time. As always, I'm the trader here, signing out. Good luck, good trading, happy hunting.